Hello, everyone. Welcome back to Accounting Focus. So, this episode is a continuation from the previous episode where we focused on solving questions on subsequent measurement of IFRS 16, right? Specifically, revaluation. So, if you've not watched the previous video, kindly go and watch so that you appreciate revaluation, because that's our first revaluation question. And I broke down the principles in that video in case you've not watched the principle videos entirely, right? Don't forget that this channel is good for both professionals and then students. Okay, if you like this video, kindly hit the like button. If this is your first time, kindly subscribe. And if you also think someone else will need, kindly share, kindly recommend us to your people. Okay, so not to waste time, let's focus on solving the question for the day. So we have Crunch Limited bought a piece of machinery on 1st January 2015. So if you watch my previous video, I mentioned to you that anytime you are solving standard question, you should focus on the date. They are very important. From A&C Machinery Limited for $200 million. So this should be 2,000. Okay, should be $2,000 million. The initial estimated useful life of the machinery was 10 years. Straight line. So you realize that in our previous video, they give you the useful life in terms of percentage, right? Sorry, they gave you the depreciation rate. They didn't give you the total useful life. So we had to come up with the total useful life. But this time they give you the total useful life. That is very solid. On 1st January 2017, the machinery was revalued at $1,800 million with the initial estimated life changing. So this. You also have to focus on this. 1st January 2017. The machinery was revalued at 1,800. So on 1st September 2018, this asset was sold to a competitor, Tips Limited, for $1,600 million. Required, draft the relevant extract in respect of the machinery of the income statement for each of the years ended 31st December 2016, 2017, and 2018. So we are doing it for 3 different years. Okay, 3 different years. So without wasting my time, let's solve. So Crunch Limited. Now, I think our first working should be on depreciation because we can get all our data solid. So for 2016, right? For 2016, what was the cost of the asset? So the asset was bought in 1st January 2015, right? And the depreciation was on straight line. So whatever happens, you have to calculate the depreciation on straight line. So it's going to be 2,000 over, because this is the cost, 2,000 divided by the number of years, which is 10. And I think this will give you $200 million. Are you with me? If you don't have your calculator, get your calculator, okay? So that you can flow with me. All right. For 2017, they said on 1st January 2017, the machinery was revalued at $1,800 million. If you watch the previous video, I told you that if we talk about revaluation means that we are giving a new cost to the asset. Is that not it? So the asset is no longer 200. It's no longer 2,000. It was revalued. It was revalued to 1,800. So we have 1,800 here. That's the new cost. Are you with me? Divided by, and I told you that after revaluation, we don't use the same useful life because you are giving something, you are giving a new cost. Why don't you focus on the remaining useful life? Okay, you are supposed to focus on the remaining useful life after revaluation, not the original useful life. So if you bought the assets in 1st January 2015, year 1, 2016, year 2, and the revaluation happened 1st January 2017, it means that the assets were used 2 years and after it was revalued. So to focus on the remaining useful life, it will be 10 minus 2, and that will give us 8, right? So we are going to have 1,800 divided by 8. We are having 225 here, 225. So that will be the depreciation for 2017. Then when you focus on 2018, on 1st September 2018, this asset was sold to a competitor, Tips Limited, for 1,600. So it was still in your books, right? And then in 2018, this asset was sold to a competitor. So it means that the asset couldn't even complete a full year accounting period. Is that not it? So depreciation is still on cost. So we'll maintain the new cost of the asset, which is 1,800. We divide it by our, what do you call it? Our new remaining useful life, which is 8. Then times, because it didn't complete full year, from 1st to, they said 1st September 20, it was sold 1st September 2018. What it means is that the assets was only used up to August ending. So January, February, March, April, May, June, July, August. Count with me. That's 8, right? So 8 months. So that will be 8 out of what? 12. Because you have 12 months in a year. Is that not it? You have to prorate the depreciation because it's on monthly basis. Are you with me? So we are going to have 1,008 divided by 8 times 8 over 12. That gives us 150. We are trying to make the solving as simple as possible. Are you with me? So this is our depreciation. So let's take our statement of comprehensive income for 2018. Is it 2016, 2017, and 2018? There are 3 years. So you have 2016 here, 2017, and then you have 2018. Okay. Now, when you talk about, so these statements of comprehensive income, obviously depreciation will come in here. So depreciation, don't forget that all of this is in dollars, milli, right? So the depreciation. So the first 2016 depreciation, I know it was 200. Is that not it? 2017 depreciation, that was 225, if I'm correct. And then our next depreciation was 150. I hope you are following me. All right. So let's go back. So we are done with the depreciation. So 200, 225, 150. Is that not it? All right. Now, let's focus on other matters. It says that the assets was bought 1st January 2015, and then it was revalued 1st January 2017. It was revalued 1st January 2017. What it means is that anytime there's revaluation, I tell you that anytime there's revaluation, it introduces what we call revaluation gain or loss. Is that not it? So our second workings should focus on what? The revaluation. So the revaluation gain or loss. So I'm going to have revalued amount as at 1st January 2017. Is that not it? What was the amount? $1,800. Really? Now, I tell you that anytime there's revaluation, you have to calculate the carrying amount to that date, okay? So that you know the gain or loss. Because if you are revaluing, they are looking at the date in your books. They are looking at the carrying amount in your books. Then the date they revalued it, then they will compare whether there was a gain or loss, okay? So I explained it clearly in our previous video, right? So carrying amount as at, 01/01/2017. That is 1st January 2017. Is that not it? So let's calculate. So we have our cost. Cost is 2,000. Is that not it? So we have our cost here, 2,000. Then our accumulated depreciation. Okay. Depreciation was on straight line. Is that not it? So we take our cost, which is 2,000, divided by what was the useful life? 10 times. So if you have your asset, if you bought an asset from 2015 and you are looking at carrying amount, it means that you have to look at the accumulated depreciation, subtract it from the cost. So you know the cost of the assets in your books as at the date of the revaluation. Is that not it? So 1st January 2015 to 31st December 2015, that will give us 1 year. 1st January 2016 to 31st December 2016, that will be 2 years. And the revaluation happened a day after. So it means that the asset was used for 2 years. So 2. Is that not it? So we end up getting 2,000 divided by 10 times 2. We end up getting 400. So 400 becomes what? Our carrying amount as at that date. So we are supposed to subtract it. Okay. Now, what's something? This is the amount you have in your books as at 1st January 2017. But when we revalue it, we're having 1,800. Has there been an increase or there has been a decrease? There has been an increase. Is that not it? So the increase is what will give us the revaluation gain of what? 200. Because you are gaining. You had 1,600 in your books, because that was what the carrying amount was. That's what you thought the cost should be. But then when they went to the market, the specialists went into the market to revalue the assets, realized that no, you've actually understated your figure. So you should increase it by 200. So it's a gain to you. Are you getting the picture? Are you getting the picture? Because if it increases, it becomes a gain to you. Are you getting it? So this revaluation gain, what did we say we do to it? We will record it. First of all, the increase has happened. So the credit must hit the reserve. Is that not it? Under equity. But at the same time, we also have to record it under OCI. So depreciation. Before there is profits or loss on disposal. So let's mark. But then OCI, it doesn't form part of the statement of profit and loss. So we record it separately. Revaluation gain. Now the question is, which year did the revaluation happen? It happened in 1st January 2017. So it means that we will record it under this one as 200. Are you following, my people? All right. Very simple. Very simple. So this is the 2 is 4. So let's add the workings to it so that when someone is looking at it, the person can easily trace. So workings number 2, okay, and this one was workings number 1. So that is it. Now let's look at the next one. Now the asset on 1st September 2018, this asset was sold to a competitor, Sales Limited, for 1,600 million. So now let's focus on the profit or loss on disposal, right? So you have an asset. So you revalue the asset to 1st January 2017, and then 1st September 2018 you sold the assets, right? So how much did you sell it for? 1,600. So what I'm going to do is that we are going to look at the carrying amount as at 1st September 2018, right? And then we'll see the amount in the books. After we see the amount in the books, we now see how much we sold it for. Okay, how much we sold it for. So if you see how much we sold it for, is it higher than what was in the books, or it was lesser than what is in the book? If it's higher than what is in the books, it means that we made a profit on the disposal. If it's less than that, it means that it's a loss. Are you with me? All right, so let's look at the profit or loss on disposal. So first September 2018, right? And the revalued amount was 1,008. 1st September 2018, and then the amount received was 3. Profit or loss. Profit or loss. Profit or loss and disposal. So what was the proceeds received? What was the cash received? So the cash proceeds received, cash proceeds was 1,600. Yeah, agree? Yeah, agree. All right. So now we have to find the carrying amount to that date, right? So carrying amount to 1st September. So 1st September 2018. So carrying amount. So with the carrying amount here, we are going to take, so up to September 1, 2018, right? So we are going to take the cost, the new cost of the assets. So what was the new cost of the asset? The revalued amount. Is that not it? So the revalued amount gives us 1,800. Is that not it? Then we look at the accumulated depreciation. Accumulated depreciation. We've already calculated it, so we can just pick it. Now, why am I saying accumulated depreciation? The asset was revalued 1st January 2017. So from 1st January 2017 to 31st December 2017, that's 1 year. Then from 1st January 2018 to September 2018, that is 8 months. Is that not it? So we can it means that the asset was used for 1.5 years. We can easily calculate, or we can just pick these figures. We can just pick these depreciation figures. This one, 2017 and 2018. How we are getting it? So we can pick these two figures, or we can go the other way around. If you want the other way around, let me show you how you go about it. So you can just add those two. Let's do the other way around. So yeah, you see whether it's correct. So we take the 1,800, right, divided by 8 times. So 1st January to 31st December 2017, that is 12 months, right? Then January, February, March, April, May, June, July, August. So July, August, right? That is 8. So let's add the 8 to the 12. So we are getting 20 months, right? So you take 20 over what? 12. In other words, it's the same as, so 20 divided by 12. In other words, the same as, yeah, so this is it. How we are getting it. So let's calculate 1,800 divided by 8 times 20 times 20 over 12. You end up getting 375 as our accumulated depreciation. Are you with me? So let's add these ones here. 225 plus 150. This one and this one. They are giving it a C, 375. You can do the calculation and see for yourself. Are you with me? So it means that the current amount will be 1,800 minus 375. So that is 1425. 1425. That's the current amount. Now, in this case, do you think there is a gain or disposal? Put it in the comment section, okay? Do you think there is a gain or disposal? So there is a gain. Why is there a gain? You thought the assets should be, you have, let's say, the cost of the assets. The cost of the asset should be 1425. You are having this calculator. The cost of this calculator is 100 cedis. But when I'm selling it to you, I sold it to you for 160 cedis. Have I made a profit or loss? I've made a profit because I sold more than the cost of the asset. Is that not it? So it's the same thing. The current amount is 1425, but it has been sold more than 1,600. So 1,600 minus that, that'll give you 175. However, I get it. So this becomes the profit on disposal. So that is under 28 in 2018. So 175. Are you appreciating the concepts? All right. Now we are not done. You are supposed to. So this is everything that goes under statements of comprehensive income. Let's look at the statement of. Financial position. Statement of financial position. So let's focus on the statement of the financial position as at 2016, 2017, and then 2018. Are you with me? You are making this question very simple. Very, very simple. So 2016, 2017, and then 2018. Don't forget, if you have any question, put it in the comment section, okay? So we have non-current assets. Now, these non-current assets, we have the property, plant, and equipment. The property, plant, and equipment here. Machinery specifically, but it's all property, plant, and equipment. So I like to put it as property, plant, and equipment. So before, what is the cost? You know, in the financial position, we have to show the, what do you call it? In the financial position, we have to show the current amount, not the cost. How we are getting it. So what is the cost here? The cost here was 2,000. If you remember, let me show you in case you've forgotten. So this is a 2,000. This is a 2,000 here. Are you with me? All right. Then what is the revalued amount in 2017? So the new cost became 1,800. I hope you are flowing with me. And then it was sold for 1,600. We don't need this. So You've already done the calculations. So 2000, and then as at 2017, it was 1800. 2018, it was still in the books, even though it was still in the books to some point. Is that not it? So 2018, the asset was sold. Yes, the asset was sold. It is no longer in the book. As at the end of 2018, as at 31st December 2018, it's no longer in the book. So there will be that share. Are you with me? So what is accumulated depreciation? Accumulated depreciation. Now for 2016, the accumulated depreciation will be 400. And do you know why it is 400? It will be 400 in 2016 because the asset was bought in 2015. Even though the yearly depreciation was 200, we are looking at the accumulated, not the depreciation for the year. I hope you are getting me. Not the depreciation that went into the income statement because the income statement focuses on just the year. But then this time, the cost, the statement of financial position is looking at accumulated depreciation for the time being, right? It was bought in 2015. So if it was bought in 2015, that will be 2,000, right? Divided by what? The 10 times 2015, 2016. As at the end of 2016, that will be by 2. So 2,000 divided by 10 times 2. That will be 400. I hope you are getting the picture. Okay. So that is it. Now in 2017, it's a new asset that was, it was, sorry, not a new asset. It was an asset that was revalued, right? So we are not going to consider this 400 and say we are adding this 400 to it. No, because it's even going with a new useful life. Is that not it? The remaining useful life of it. So you only consider the new depreciation. So it gives us the 225. Was it 225? So 1,800 divided by 8 for, yes, so 225. So we have 225. Are you getting the picture? So this gives, it becomes the total here. So 2,000 minus 400, 2,000 minus 400, that gives us 1,600. And then 1,800 minus 225, that'll give us 1,575. This gives us the carrying amount as at the following date: 2016, 2017, and 2018. Are you with me, everyone? So that is basically that. That is basically it. So it's very simple and straightforward. Very, very simple and straightforward. Now, before I forget, the equity. So under equity, I'm sure you're wondering why I've not put. So under equity, there will be revaluation, right? There will be revaluation surplus or revaluation reserve or reserve. How much was the revaluation? You have to confirm. How much was the revaluation? Okay, so it was 200. So the revaluation was 200 and it happened in 2017. So 200. So that is it. I hope you are getting me. So this brings us to the end of the presentation.